everyone. I'm Patty Levitt-Reed with Shed the Debt. We have an exciting guest today because we're going to be talking about the importance of honesty and clarity and transparency. I'm joined by Joel Kideckel. He is with Goldhar Associates. He is a vice president of corporate restructuring. He has seen a lot, let me tell you. Joel, welcome to the podcast. Let's start by you telling me just a little bit about yourself. Why are you even in this business?
Well, I just found it interesting. I was previously an accountant. I also am an accountant currently, and somebody just offered me to do some work in the insolvency field at the accounting firm I was with, and I just found it very interesting. So I slowly shifted out of accounting and into insolvency, and I've been doing that now. I've been a licensed insolvency trustee now for 25 years, working for various firms, and I joined Goldhar about 2 years ago.
Let me ask you, what do you find most interesting about, people become insolvent all the time, but are there patterns that you've seen as you've sort of shifted focus?
No, really, not much has changed. People, now sometimes their homes are a factor in the insolvency process, whereas I think in the past it wasn't. Individuals who were going through the process were less likely to be homeowners. That's happening a bit more often now. But really, nothing else really has changed. It's pretty well been same situations that people losing their jobs or health reasons, I guess, are the most common issues for the individual insolvencies.
And just on that topic of their home, we are seeing home ownership. We saw interest rates at rock bottom. We have seen people use their homes as ATMs. And as rates started to go higher, that vicious circle became less available to them. And have you seen that side of the home ownership sort of accelerate?
Yes, absolutely. Seeing more people with homeowner lines of credit rather than just the fixed mortgages, because again, the line of credit is making it easy for them to do exactly as you said, using their home as an ATM to help finance their other expenses.
And did the pandemic accelerate things?
Funny thing is, no, because there was the expectation, but because of all the government assistance programs, it actually had the reverse effect. It actually slowed down, but things are now picking up, and people are now coming out of that situation where the government assistance isn't available, or for some of the small business owners, they're now having to repay their government assistance loans.
So sort of like a day of reckoning. Okay. And you're going to tell me from your perspective, what does honesty and transparency mean to you?
Well, it's just making sure that debtors, when they come to see us, that they provide us with information about their financial situation. We're there to guide them through the process, but we need to know the truth behind their story to make sure that we're able to help them properly.
But Joel, there is a tendency when you have financial difficulties to not hide the facts, but maybe not fully disclose them. What happens if someone comes to you looking for a fresh start, but doesn't give you all the details?
Well, there's a few things that could happen. First of all, we may direct them in the wrong direction because we don't have the full story behind their situation. The other issues that come up is there's a requirement under the Bankruptcy Insolvency Act to disclose the information, and we provide the creditors with a full disclosure, financial disclosure. It's a sworn statement, so it's important that the debtors do provide us with that information.
And it's got to be full, true, transparent. Can you give me an example of when someone did hold back, though?
Well, one example I could think of, and we're working on a number of them currently, was there was a group of individuals. This is interesting. They all came from the same accounting firm, And the
Oh,
accountant actually advised them to indicate that their homes were worth less than what they were. They filed the bankruptcy with us, and then these facts came to light after the fact. It was too late to change anything. And in this situation, all these individuals suddenly had to pay all their creditors 100% what they owed, rather than when they started the process, they thought they were going to be paying pennies on the dollar. So here they went through the whole bankruptcy process for no reason.
wow. Only to be told you're disqualified because you didn't have full disclosure.
Right. I mean, they still went through the bankruptcy process, but basically they did the same thing that they would have done if they had just made arrangements themselves. So now they have the bankruptcy on their financial records, on their credit records.
Without the benefit of paying less.
Yes, correct. Yeah. So that's just one story of not disclosing your information at the beginning, your truthful information.
So we're talking about an individual coming to you. What happens if they're a business owner and they come to you?
Well, again, if it's a business owner and we discover facts after, or we discover information after the fact, then the same thing would happen. We would have to deal with the assets. Now, there's also in the Bankruptcy Insolvency Act, there's requirements of individuals to disclose this information, and if they don't disclose the information, then there could be repercussions because it all falls under a federal law. So there are penalties that individuals could incur for not disclosing the information.
Whoa. And that could get very costly.
It could be fines, or, in the most extreme situations, could even be imprisonment for disclosing false information.
How do you build trust with someone? How do you get them to say, this is it. This is everything that I have and everything that I know?
Well, again, we try to impress upon them that we're there, where information they provide is confidential, and we're there just to guide them through the process, and I also just to let them know that there are penalties for disclosing false information, and in addition to that, when they do disclose the information, there are documents that are signed, that are filed with the federal government, and one of the documents actually is a sworn statement. So again, you're swearing something under oath. So there are penalties even just for putting false information on a sworn affidavit. So our sworn statement, I should say. So there's we try to impress upon them that the process would go smoother. We could explain to them all the issues that will arise if they disclose that information to us.
What happens if you're a corporate director? Like you don't know all the information? Are you responsible to?
Well, again, as long as you're not giving us false information.
Oh, I see.
If
Okay.
we're asking you information, you don't have it, then say, I don't know what the answer is. But the key is not to provide false information. Just tell the truth when you're asked the question. Either this is the answer, or I don't know what the answer is.
Mm-hmm.
If you don't know the answer, don't try to say, I don't own something. The company never had a piece of property, in such a location. Don't say that. But if we ask you what are the assets or what are the liabilities, tell us what they are and indicate this is all you know. But don't tell us that you don't have, like you say, a piece of property somewhere when you actually do.
Yikes. Before I let you go, though, and certainly misrepresentation around a home for many people, it's their largest asset. So if they try to come in lower, maybe they feel they pay less and there's some money they can get out of it. What are the most common missteps that you see?
In regards to
Or just in regards to filing and going through a licensed insolvency trustee to get a fresh start?
Well, again, it's just providing us with false information, not disclosing your assets.
Sort.
Yeah, not especially not disclosing assets, because that's the part that will really cause you a lot of grief.
How do
in
you
the
know
end.
if I have a hidden bank account?
Well, we do a little bit of research. We don't do too much, but to be quite honest, you've probably, as a debtor, you've probably given a lot of information to your creditors. And your creditors are the stakeholders here. They're the ones that have the most to lose or gain. So when we present, and they're the ones that get this statement, there's a statement that you sign that discloses all your assets and your liabilities, and there's a number of questions that are on there, and they receive a copy of that. And there's been a number of times where creditors have come back and said, hey, hold on, so-and-so disclosed on their credit application that they had this asset. Another one, of course, is if a friend or an ex-spouse or someone of that sort, those are, I guess, the ones that, yes,
yeah,
will come out of the woodwork and say, hey, by the way, did you know that he or she did such and such, or sold such and such, or has this asset? So there's a lot of I guess I don't know if you call them whistleblowers, but individuals who find out about about your insolvency and want to make sure that everything's fully disclosed and that they're not hiding something.
So, I mean, I was going to ask you for your best piece of advice before I let you go, but full, true, plain transparency, full disclosure.
Absolutely. Because again, like I said, it's going through us, creditors, the government agency, the superintendent of bankruptcy receives all these documents, they review it, and depending upon where that goes, in certain cases, it goes before a bankruptcy court. So you don't want any time along those steps to be questioned on your honesty.
You think you're smarter than them, but you're not.
Correct.
Thank you so much, Joel.
Okay, thank you.
Thank you. I've been speaking with Joel Kideckel. He is with Goldhar Associates. It's all about honesty, full disclosure, and it's in your best interest if you really want to shed the debt.